Okay, we're ready to get started here. Thank you so much for tuning in. Today's topic is COVID-19, what landlords need to know today. There's a lot for us to unpack, so we're going to get right to it. But first, before we move forward, I need to read this legal disclaimer. This presentation is for informational purposes only. This should not be regarded as financial or legal advice. Be sure to consult qualified financial or legal professionals to verify any information. A few housekeeping items before we move on. My name is Nate Smoyer. I am the Director of Marketing here at Avail. If you need help with your Avail account, our channels are still open for you to reach us, support@avail.co, or by phone 312-292-9347. So if you have comments or questions about your account, we'd love to help you out with those, but make sure you use those channels so we can get to you guys. Second, as the presentation goes through, feel free to post comments and questions down below. We're going to be doing open Q&A at the end of this, so anything you post in there, we're going to be reading through it and sifting through, and we want to get to as many of your questions as possible, as well as we'll be addressing some of the questions that were submitted beforehand. There was a handful of themes, and it really helped shape our presentation. Thank you so much for all those who have submitted questions already. Please make sure that you're entering those below. And finally, anytime during this presentation, be sure to be sharing or feel free to share this presentation. You can hit the like button, you can share to your page, share to other groups that you're part of where other landlords are hanging out, and start watch parties. It's a great way to pass the information on and make sure other people are getting this. There's a lot in here. We did a lot of research, and hopefully this will be helpful to you. And of course, at the end of this presentation, we have some things that we want to send to you. Last but not least, I want to kick the show over to our presenter, Lawrence Jankalo. He is the co-founder and COO of Avail. Lawrence, take it away.
Thanks, Nate. And thanks again to everyone who is on live with us and for all the questions that were submitted ahead of time. We tried our best to incorporate answers to those questions throughout, but based on the sheer number of questions we got, it's unlikely we got to everything. But this is clearly a topic that everyone is focused on, and so there'll be time at the end for some live Q&A as well if we missed the question that you wanted. But let's just jump straight into it. We got a lot to go over, and I think over the next 40 minutes, we'll just generally talk about COVID-19. I want to give you guys a quick update from the survey we conducted last week. That survey had over 7,000 renters respond to it, and 2,500 landlords. So I think there's a lot of good material in there. And then I think we can dive straight into what options there are for relief, and how you can go on and work with your tenants during this crisis. As I said, at the end, we'll leave some time for open Q&A as well. So to start, on March 23rd, we had sent out a survey to some of our customers to find out how COVID-19 has already been impacting them. We primarily asked questions about employment and rent. And like I said, the survey received over 7,500 responses from renters and 2,500 responses from landlords. I believe this is one of the largest surveys conducted, specifically geared at landlords and renters, and so we're actually quite proud of that. Although we were happy to get so many responses, we unfortunately did see a situation that was a lot scarier than we anticipated. Just over half of renters that responded had in fact said that they lost their job due to the COVID-19 pandemic. And of those renters, 46% were employed in full-time roles previously. We went on to ask about rent and how they intended to pay the rent for the coming months. And the first thing to note is responses from our survey did reveal that tenants did not want to fall behind on rent. They very much want to and prefer to stay current on their rent, but the situation is leaving many of them with limited options. So I think we just have to understand where they're coming from there. About a third of renters said they had no choice but to just not pay rent for the upcoming months. And another third said they would have to take on additional debt to meet those payments. And that debt may include borrowing from friends and family, maybe even taking out a personal loan or putting rent on their credit card. You'll see we also discuss this a lot later when we talk about landlords and renters and how they should be doing things. But our survey showed that communication between landlords and renters just isn't happening, or at least not the way that we would want it to. 75% of renters said they had not been contacted by their landlord. And the same thing's happening the other way around, where 65% of landlords said they hadn't been contacted by their renters. So we can clearly see that there isn't a lot of communication happening. Further, we also saw that if landlords had been proactive in reaching out to their renters, they were much more informed. In those cases, 60% of renters had given the landlord some pre-warning before rent was due that they had lost their jobs. If landlords hadn't opened up that dialogue, the number of renters who were upfront about that dropped by half to only 34%. We also asked landlords about the preparedness for the crisis, and specifically if they already had access to quick capital if they needed it. And unfortunately, nearly 60% responded that they don't readily have a line of credit available or any easy way to access credit to float expenses in an emergency. So you combine that with some of the communication that's not happening, that hasn't been that robust, and it seems like most of us are going into this pandemic a little unprepared and unknowing about what to do when rent payments are missed. The last topic from the survey that I think was relevant for this discussion right now is whether landlords had insurance against lost rent. This is commonly called rent default insurance or rent guarantee insurance. But here, based on the data, it shows that rent default insurance is actually still quite uncommon in the United States. I think only 4% of the landlords actually having bought a policy. And then more than 2/3 of respondents didn't know what rent default insurance was. But I do think this is a potentially important option for many of us still. If your tenant is current on their rent at the moment and there's at least 6 months left on the lease, then you may be eligible to purchase a policy that would provide up to 6 months of lost rent. And so if that's your situation, it should be something you look into. Of course, outside of our survey, there's a lot going on across the country, and there are a few things everyone should be aware of. I think by now everyone's heard about the $2 trillion stimulus bill called the CARES Act. This has been passed and is already making its way into the economy. There are several parts of the bill geared towards business owners and property owners that we'll address in a bit, but I wanted to start with some of the things that are going to address the needs of your tenants first. The first thing is that I think we can see unemployment is rising. Because of the government recommended lockdowns, we're seeing that unemployment is growing actually quite rapidly, much more than we've seen in the past, in orders of magnitudes higher. For many of us on the webinar, unemployment is definitely a reality for our tenants and maybe even for some of us ourselves. And I think it's important at a time like this that we need to, even more than ever, realize that the landlord-renter relationship is not an us versus them paradigm. And instead, we have to be empathetic and reasonable and, above all, work together. And I'm sure you've seen in the news that unemployment reached 6.6 million claims, which is actually a really sudden surge for the system to take on. And so if your tenants are recently unemployed, it's going to take a lot longer than we're all expecting for them to begin receiving any unemployment benefits. Many of them are going to struggle just getting a hold of someone, as the sheer volume of requests that are happening are extreme. So I think this just requires us all to remain patient and be helpful, and probably above all, just be understanding of everyone's frustrations going into this. That being said, unemployment benefits have been expanded through the CARES Act. In addition to the unemployment benefits offered by each state, the CARES Act provides an additional $600 per week for up to 4 months. And who is eligible has also been expanded to include self-employed and gig workers. And those have typically been two groups that were ineligible for unemployment benefits in the past. And as I mentioned, though, it can take a bit of time for people to file for unemployment, get a response, and then get the money that they need. So we just need to be patient. And I think these additional unemployment benefits do extend through the end of July, so there is some long-term time benefit there. Additionally, there will also be some direct payments to individuals directly from the federal government that can be expected fairly shortly. Those direct payments total up to $1,200 if you're single and $2,400 if you're married. There's an additional $500 for each child under age 17. So although this isn't specific to your renters and applies to just the American public in general, it's valuable information for you to share with them when you're discussing options for them to pay rent. It's information that they should know. Those direct payments they are being phased out based on the income bracket. That bracket starts at $75,000 is when it begins phasing out, and is completely phased out at $99,000. And those numbers are for an individual. And to get those direct payments, I think those are coming through tax filing. So if you've filed your taxes already, my understanding is you'll receive the direct payment the same way as you would any of your tax returns. And that's true if you haven't filed your taxes and are planning on doing so. However you're paying or receiving your refund, you'll receive the direct payment the same way. There's also a lot happening with evictions around the country. There are two types of important bans on evictions happening in some states that are protecting renters. The first is an eviction moratorium, and the second is somewhat of a police refusal to process evictions. And so with the CARES Act, an eviction moratorium has been placed on properties with federally backed mortgages. And beyond that, some states have instituted their own moratoriums on all properties. So the moratorium prohibits you from filing evictions until the COVID-19 crisis is over. However, in states where a moratorium has not been placed, there actually may still be a refusal to process evictions, either mandated by the mayor's office or the sheriff's office. So it seems like evictions across the country have come to a halt until the crisis is over. Now, it's important to note these rules are changing quite frequently. And I know when we were reviewing the questions that were submitted, there were quite a few on evictions. So we wanted to provide a resource. Here you can monitor real-time changes at evictionlab.org. That's a Princeton University project funded by the Bill and Melinda Gates Foundation, and they're actively tracking eviction policy across the United States. Again, that was evictionlab.org. Also happening a lot in various parts of the country are rent strikes. So these are protests. They're typically, in the past, have been against large landlords or apartment complexes, and they still are now. So far, there have been rent strikes reported in major cities like New York, Chicago, Houston, but I would predict a lot more are on their way. Where possible, it's best to avoid rent strikes. These tend to be more of a media frenzy than an effective way to compromise between landlords and renters. But of course, I think we all know if that we're treating our tenants fairly and are willing to work with them in their time of need, then rent strikes shouldn't really be much of a concern for us. If you do find yourself in the middle of a rent strike, our recommendation here is it's best to work with an attorney to sort through that mess. And then last kind of weird thing that's happening at the moment to be aware of is there are some scams. If you receive a call from someone claiming to be affiliated with the World Health Organization or the CDC, it's really best not to answer, respond, or engage in those. There's also emails going out with links in them asking you to visit a website to get your stimulus pay. It's better not to click those. Don't forward those on to others. And obviously be aware that no one has to pay anything in order to receive their stimulus checks. Okay, this next section I think is probably what we saw most questions geared at, which is what kind of relief and options are there for us as rental property owners and landlords. And there are several items in the CARES Act that are relevant to us, including the Paycheck Protection Program, the Economic Injury Disaster Loan, the SBA loan relief, and mortgage forbearance in general. And so I think we'll just go through each of those one at a time. Okay, the Paycheck Protection Program, or PPP, is really designed for small businesses, those with 500 or fewer employees. It's designed to help them keep their employees during this crisis, hence the name Paycheck Protection. The only qualifications to be eligible for the PPP is that, one, you have 500 or fewer employees, as I mentioned, and two, that you were in business prior to February 15th, 2020. And although it's called a loan, the majority of it is forgivable, meaning you don't have to pay it back as long as it's used on payroll, utilities, and rent. A couple things to know about the PPP. The total amount of that loan that you're eligible for is roughly 2.5 times the sum of your last 12 months' average monthly payroll, rent, utilities, and mortgage interest. The forgivable amount of that loan is any amount that you spend on those things, payroll, utilities, and rent, in the following 8 weeks from when you received the loan. So keeping good track of your expenses during that time is going to be pretty critical. And then for any amount that wasn't forgivable, the interest rate on that remaining portion is actually only 1% and is due to be paid back within 2 years from when you took the loan, but they do give you 6 months of deferment before you need to start making payments on that. The other benefits here are there are no fees associated with obtaining the loan, and you don't have to provide any personal guarantees or collateral required. So who does this really make sense for? In our population here, if you're a small landlord with some payroll, rent, or utilities that you have to help you manage your business, this is actually a pretty good option for you to look into. One last thing to note on the PPP, however, is that it does not cover lost rent. Okay, the second one here, the Economic Injury Disaster Loan, or EIDL or EIDL, so a lot of different ways to call it. That's different than the PPP. Although you can apply for both if you needed to. The EIDL has been in existence before the COVID-19 pandemic started, and was originally designed to provide relief, mostly due to environmental disasters like hurricanes and floods. And this program is now still available on the basis that COVID-19 is now a national natural disaster. This loan allows for up to $2 million at a pretty favorable interest rate, currently 3.75%. Applying for the loan in the past has taken several months. And so with the CARES Act, they extended this program to provide an immediate grant or advance of up to $10,000. So that grant is then also forgivable, meaning it doesn't need to be paid back. So if you're on the EIDL website, which is run by the SBA, and you need access to this money faster than the 3 months it might take to get the full loan, be sure to hit the checkbox that says you want the $10,000 grant. They're making a claim that $10,000 will be available to you within 3 business days. And the other thing is, if you don't end up proceeding forward with the actual loan once you're approved, you still don't need to pay back the $10,000 advance. That's yours to use for your business in its emergency. Some other things to note on the EIDL. Again, that $10,000 grant does not have to be paid back, but any amount as part of the approved loan later does need to be paid back. So if you did take out a loan for $100,000, $10,000 of that would be forgiven, but you still have to pay back the other $90,000. That $90,000 would then be amortized over 10 years at a 3.75% interest rate. Okay. Taking the advance, the $10,000 grant, does not mean you are obligated to take the loan later. So if you qualify for the loan, you're not obligated to do it. Okay. Now, there is a limit on this program, and I believe once the SBA reaches its allocated funds for the grant, it will end. So urgency on this program is important if you're wanting to apply for the $10,000 grant or the broader loan as well. In fact, I would encourage everyone on the call to apply for this loan. You do not need to have employees for you to be eligible for this, and you can use any part of this to cover unpaid rent if you needed to. Okay, COVID-19 has triggered some mortgage forbearance help from both Fannie Mae and Freddie Mac. So what this allows is that any mortgage borrowers with a federally backed loan can seek forbearance up to 6 months on single-family homes and 30 days on multifamily properties. So if you're wondering if your mortgage is federally backed, it likely is. 2/3 of all mortgages are through Fannie Mae and Freddie Mac, and 95% of all mortgage-backed securities are backed by Freddie and Fannie. So, and I think this also includes FHA, USDA, and VA loans as well. So a couple of things to note on this. Forbearance is different than forgivable, which is what we talked about with the PPP and the $10,000 grant from the EIDL. So here, you still have to pay back your mortgage. It's just deferred for that time period. And most likely what that will do is just extend the term of your mortgage by that time period where it was deferred. It can also be extended past that 6 months or 30 days if needed. So for single-family homes, you can get an additional 6-month extension once your first 6 months concludes. And for multifamily properties, you can extend it twice for 30-day increments if needed to. So you can get a total of 12 months on single-family homes and a total of 90 days on multifamily. Okay. One big caveat to be aware of here, and we'll mention it again later because it's important, if you do take mortgage forbearance, you are not allowed to charge any fees or penalties to your tenants related to rent non-payment. This forbearance is entirely meant to help you provide and pass along relief to your renters. Okay, really quick on these next 2 slides. If your mortgage is serviced through the SBA and you have an existing relationship with an SBA Express lender, you can access up to $25,000 in bridge loans. And this can be a pretty fast turnaround due to the nature of your existing relationship. So check on your loan and your relationships and see if you have an SBA Express lender. Additionally, the SBA is offering 6 months of debt relief on the principal, interest, and fees for the loan that they service. So again, if your loan is serviced by the SBA, this is an incredible option for you. And lastly, on mortgages, if you don't have a federally backed loan or you don't have a normal residential or commercial loan, that doesn't mean you don't have any options. As the slide in front of you says, banks don't really want to be in the business of owning rental properties or even going through the process of foreclosures. And in fact, I think there are preventions from them going through foreclosures at this time anyway. So they're very willing to work with you and find a solution. Some things that they can offer or that you can suggest include maybe doing interest-only payments on the loan for a short period of time. You can ask them for your own forbearance for a period of time, maybe do a refinance or reduce the interest rate. All of these things are options that most banks are going to be willing to work with you on. Now, it can take time, so the real thing is that you should call your loan servicer immediately. Okay, this next section I think is pretty important, as being a landlord isn't just about getting relief in times of crisis. We still have to communicate with our tenants, handle maintenance, we have to do leases, handle tenant turnover. So I think it's important to talk about these things during COVID-19, especially while we're in lockdown. As you saw in our survey results, it's really important to be proactive around communication. We should all be reaching out to our tenants so that we can work together. It's especially important as landlords that we reach out to our tenants and address their fears. Right now, it's a pandemic with millions of people losing their jobs. Hundreds and thousands of lives are likely to be lost. I think it's important that we express our concern for their well-being and everyone's well-being, listen to their pains, and above all, we just have to be ready to compromise and work together here. Although we do want to be empathetic and really find out how they're doing, there are a couple laws in place that prevent us from doing a few things. So one, we're absolutely not allowed to ask them health-related questions. So we certainly can't ask them if they're infected with COVID-19. Can't do that. We shouldn't, and also legally aren't allowed to just show up unannounced. We can't be and shouldn't be aggressive or demanding. So keep that in mind. Then we also can't threaten or coerce someone into paying rent by way of eviction, least of all because obviously evictions have a moratorium on them right now, but threatening during a time like this is not the right path to go anyway. I think it's important that we realize this is a stressful time for everyone. So, I'll mention it a third time. We just need to be patient. The other thing, I mentioned it earlier, but I want to mention it again on the mortgage relief. If you accept federal mortgage forbearance assistance, that benefit is meant to extend to your tenants. So the expectation is that you provide rent relief because you receive relief on your mortgage. The act also does prohibit you from assessing fees to your renters while the mortgage is in forbearance. So you can't tack on any late fees or those kinds of things if you've taken forbearance. Okay, it is important that we all have a plan. We know that issues will come up around rent. We know things will come up around leases and maintenance. So having a policy ready to go is pretty important in a time like this. This is something that you should be prepared to share with all your renters, and it lets them know how you'll be handling COVID-19 across your properties. It's something you should put in writing, possibly email to them, and we can go through these next several slides and talk about what kind of things should be in a plan like this. First, the plan should include any changes to policies around accessing common areas in your building or anything around maintenance requests. You should set an expectation that only urgent maintenance requests will be handled while the pandemic and stay-at-home orders are in effect. Obviously, there will be some urgent things coming up. So if you are a contractor, have to be on site, it's best that everyone does wear some at least protective face wear, maybe even gloves, even if they're homemade. I know there's been a lot of controversy around those things, but I think right now the CDC is saying that wearing protective gear is going to help protect other people around you, and if they're wearing it, it protects you. So if you or your contractor have to go into the property, just encourage them to wear protective wear. Okay, this might also be a good time to talk with your tenants about their lease end dates. So I think right now we can all agree having a vacancy, doing showings is not going to be ideal, especially during these lockdown orders. And the same thing's true for your renters. It's going to be really difficult for them to find a new place and even pack and move at a time like this. So a great option to include in your plan if you have some leases expiring soon is to really check in with your renters and see if they're willing to agree to at least extending the lease a few months to get past the COVID-19 pandemic. It's also probably a good time to address the topic of renewing the lease. If they're not that interested, maybe you can incentivize those renewals a little more. Maybe suggest that you won't increase the rent this year. Maybe you'll even possibly decrease it some. But doing a renewal or at least extending the lease is really great to avoid having to be on site and do showings. But if you do have no other option and you do have vacancies, we recommend trying to get set up for virtual showings. You can use your smartphone for that, possibly connect through something like FaceTime or Google Hangouts and tour the property and answer questions in real time without anyone being exposed. That's ideal if the property is vacant, and if there are tenants still there while you're doing the showings, then again, I would suggest wearing personal protective masks. Your plan that you're including for your tenants should also include how you're handling rent situations that come up. There obviously are always going to be a handful of landlords who have extra cash on the side or access to relief already, and they certainly have more options than most of us. But based on our survey, it really showed that the majority of landlords don't have those things. And in fact, most of us are in a situation where we're barely breaking even on our properties as is. And if we don't get the rent, even with mortgage forbearance, that still leaves us having to pay real estate taxes, insurance, utilities, and we still have to do maintenance and keep the place habitable. So we are limited on our options. And so with that, I think it's still important to let your renters know that rent is still due. I think that still has to be a clear statement. But then it's up to us to then help them figure out what their options are and be educated on what's available to them. So if they have suffered unemployment, they should be aware that unemployment benefits have been expanded substantially, and that they should be proactive about getting them so that they reduce the amount of time that they don't have cash available. I think we can also let them know, if they don't already know, that they're entitled to a cash stimulus package. As I mentioned, that's $1,200 for an individual and $2,400 for a couple. And they can be proactive about that too and work to get that faster through their tax filings. And lastly, although it's not ideal, they do have the option of paying rent on their credit card. So an early compromise that we might all be able to make is potentially helping cover the costs of credit card fees and maybe financing fees, just to be able to handle rent in these first 2 months while the crisis is going on. Of course, if after all of that, if they still can't pay, then we do have to provide them more options and see where we can compromise and try to work out a payment plan. On payment plans, I think the first thing that we should try to do is understand the renter's situation so that we can make a plan that works for them and for us, and try to make a plan that can be adhered to. So if they come to us and they still can't make their rent, I think one of the first questions we just need to ask them is what terms would work for them, what can they afford to pay, so that we can develop a payment plan that's tailored for them. I don't think there's going to be a one plan fits all in this situation. But that also means you have to understand your own capabilities. So we can't go into a plan that puts us at risk and therefore our other tenants at risk either. We still have expenses that we need to do and maintenance on the building we need to do, and we can't let those slide. But it also means we don't have to be stingy either. So if we have the capability and we can offer a plan that might be more favorable to the renter in the short term, and if it's within our capability, that's something we should really consider as human beings and as stewards of affordable housing for our tenants. And then once you've agreed to a plan, it's important to put that plan in writing, make it as an addendum to your existing lease that you should expect your tenants and yourself to sign. and make it official. Okay, so I'll go through some quick options that are available for what kind of payment plans that you can offer. These are things that you can discuss with your tenants and come to terms with them directly. This first one, I think, is probably the most favorable outcome for the landlord, but it may also have some fair compromises to make it more equitable. If your renter can't pay the rent and is willing to put that on their credit card, I think a fair thing to offer is to cover the credit card processing fees. So that can range, but it is generally around 3.5%. So in an example where rent is $1,000, you might simply reduce the rent by $35 to make up for the credit card fees. If you have the capability, you can extend this option even further to cover the cost of the financing fee to help the tenant float the rent on their credit card for some time being. So for instance, 1 month of $1,000 rent, if you were willing to cover 3 months of the financing fee for the credit card, that may be an additional $60 that you provide in relief to the tenant. So if you were willing to do both the credit card fee and financing fee for 3 months, you would offer to potentially to reduce the rent by roughly $100 to cover those things, and that would provide them some immediate relief and be a fair compromise. An alternative plan, which I think is also favorable to the landlord, is to forgive maybe the upcoming month's rent and instead use the security deposit to cover that lost rent. So the pro here is that you're not out any money directly and your tenant gets immediate relief for a pretty substantial amount right away. The downside, obviously, is that you're not as protected at the end of the lease if there's any damage done to the apartment, and you also don't have any immediate next action if your renter does need additional relief for a second or more months, and then you may have to look at implementing a second payment plan on top of this one. Okay, this next option may actually be the most favorable for the renter, in which you're electing to forgive 1 or more months of rent. So this does provide them immediate relief. However, this just may not be an option for many of us if it's outside of our capabilities, understanding that we still have expenses to pay as well. If you do have mortgage forbearance and your operating expenses are low, this may be a pretty fair path forward. It really depends on your operating expenses. This next option is also fairly favorable for the tenant, in which you're reducing 1 or more months of rent. This is a pretty good option if you have mortgage forbearance, but unlike before, your operating expenses are still pretty high. So high enough where you can't forgive the entire amount of rent. So in this example here, rent was reduced by half for the same time period that you have the forbearance. So the rent that's being still continue to be paid covers the operating expenses during that time period. This last option is possibly a compromise from the ones previously mentioned, although this kind of results in no party being truly happy, but does end up being equitable. And this is to defer all or some of the rent by 1 or more months until the renter's employment has stabilized or they've received their unemployment benefits. Here, the deferred rent is not forgiven, and instead you append it evenly to the remaining months of the lease. This gives the renter some immediate relief, but does make some of the ongoing months a little more difficult. And also, I think depending on how many more months there are on the lease, this could be difficult to spread in an affordable way. So much easier to spread over 10 months than it would be over 3 months. And if you decide to have that deferment extend past the end of the lease, then it may be difficult to actually collect. So as you can see, there's really no easy option, obviously. It comes down to understanding both your renters and your needs and capabilities. And finding an option that works for both of you is going to require a lot of compromise and patience. Again, thank you to everyone for tuning into the webinar. It's been a pleasure sharing this information with you. A lot of the content we covered was sourced straight from the questions you had all submitted, so thank you again for that. I know Nate and our team will be moderating some of your live questions now, so I'll turn this back over to Nate to ask the first question.
All right. Well, thanks so much, Lawrence. A lot of information in there. Just to let everyone know, we will be sending out a copy of the recording and the deck following here, but I want to get to some of your questions first. Lawrence, the first question I want to kick up that I saw a few and came through prior to as well is how does all this affect Section 8?
Sure. I think that's a pretty good question. We didn't really cover that a lot in here. Well, Section 8 is usually monitored and maintained by HUD, the Housing for Urban Development. And I think they ended up getting their own stimulus packages somewhere in the 1.25 billion range. And I think they may have some things on top of that. So if you are Section 8, if you have a Section 8 apartment, then I think you can expect that your rent is going to be paid as always, as HUD, backs those things. So I don't think there's a lot to worry there. I think maybe you might find that there are some delays because releasing some of these stimulus funds to the various places can take some time. So you should expect to still get paid that rent. It just may be postponed a bit. One other additional thing I think that Section 8 housing is happening is that there's an increase in the eviction moratorium on those. So I think that's at 120-day eviction moratorium. So that's a little more than Freddie and Fannie Mae backed the mortgages.
Yeah, good point. And obviously you want to check with your local rules and laws to find out what those are, especially when it comes to eviction moratoriums.
Yeah, and I think typically there's some on-site inspections that have to occur for Section 8 housing, and I think those have also been postponed because of the stay-at-home orders.
Got it. Here's one for you. This is an interesting scenario. So one landlord said they had a vacancy just prior to the COVID-19 health crisis, but now once everything hit, they were no longer getting inquiries and people can't go for showings. And so they're stuck with the vacancy. Do they qualify for any of the benefit programs, the EIDL or the PPP?
Sure, they may benefit from one or all of those depending on their situation. So, we talked about earlier the PPP. If they do have some fixed costs like payroll or rent that they're paying to manage their business, then they're probably eligible for some relief there. Now, that won't cover lost rent like we talked about, but that's something that they should look into for some help. And then the EIDL, they can try to get something out of that. I know with the EIDL, there's that $10,000 grant. And even yesterday, there's new guidance on that grant where now they're suggesting that you're only going to get $1,000 per employee, up to 10,000. So again, if you don't have an employee, then the grant may not be as helpful. I think they're still giving $1,000 if you're a sole proprietorship. So again, that's still something to apply for. Any little bit helps. $1,000 here and $1,000 there covers rent for one unit. So those are good things to look at. And then with the EIDL, you're still eligible to take the normal part of that loan. Now that does have to be paid back, and there is an interest rate, but it's a really favorable interest rate. So if you are struggling, you should still apply for that and see if you can get that loan. And then the big relief option, if you're in that situation where you just can't find renters, or you can't do an eviction and you're not getting rent, is to really push on your mortgage lender for forbearance. And then same thing with any of your other fixed expenses. If you're paying utilities, potentially reach out to your utility servicer and see what options they're providing you. I think they're expecting to provide help and relief. No one's in the situation where they're just going to be a rock wall against trying to help you. So any expenses that you have, just reach out to the servicer of that and try to negotiate with them.
Yeah, it's a good point. One thing in thinking through about tenant relief, obviously wanting to help them figure out how they can pay their bills and navigating this, as you talked about, it's record number of individuals filing for unemployment, so expecting some delays. But do we have any idea of the timelines that tenants should start expecting to be able to receive unemployment benefits? And then, if not, to tack on to that, what should landlords do, once they find out the tenant has applied for unemployment, but they're obviously going to be put into a waiting queue? What can landlords do?
Sure. Well, with unemployment benefits, I think right now it's hard to tell exactly when everyone's going to start receiving those benefits. Some people, there's two benefits there. There's the normal state unemployment benefits that people should be reaching out and trying to get immediately. And then there's the supplemental benefit from the CARES Act, which gives an additional $600 per week. So the problem is there are unprecedented numbers of people filing for unemployment claims. And so there's a huge backlog. Our system was never prepared, and probably could never even have been prepared for the sheer number of people requesting these things. So I would imagine it is going to take a while for people to receive those unemployment benefits. And that then becomes more of a timing problem for how rent can be paid and how landlords can assist. So I think that's where we mentioned we just have to be patient on those things. Now, I will say for the stimulus money that's going to individuals and married couples, that we can expect a little bit sooner, I believe. I think even as early as this week, if you've already filed your taxes and you had put in a direct deposit account to either pay taxes you owed or receive a return, then I think this week about 60 million people are going to receive their stimulus checks just through direct deposit because of that. If you haven't filed your taxes yet, or you don't have to file taxes, then I think over the next several weeks, people will start receiving checks in the mail. And I think, from my understanding, is it's a lot more to process a check. So I think that they were planning on sending out up to 5 million checks per week. So if you haven't filed your taxes and haven't added a direct deposit account, it could take longer to get your stimulus check.
Got it. Here's a question. So I don't have, this is one from the comments. I don't have my rentals put into an incorporated business. So essentially this person is operating as a sole proprietor. Can sole proprietors benefit just the same as incorporated businesses through some of these programs that are being offered?
Yes, I believe so. I don't think there's any real difference in terms of benefits if you're a sole proprietorship or a formally legal enterprise. I think those things are a difference between how you treat insurance and taxes, but don't come into play here on these benefits.
Got it. Here's one. So what about no fault evictions? So really, it could be like the end of a lease term. You're just not renewing with that tenant, but we have these eviction moratoriums in place. Can you tell a tenant, hey, we're not going to renew your lease right now? And also, I think that an important piece to that question is instead of refusing to renew a lease, what should landlords be considering as additional options to that?
Sure. Well, if a lease is expiring and you don't want to renew with that tenant, you can certainly make it clear to the tenant that we're not renewing and we're not going to sign a new lease, and that the expectation is the tenant moves out. You can make that clear. However, I think during this time frame, if that's the path you want to go forward with, if the tenant has been paying their rent, then I think potentially a better outcome is to just extend the lease by 2 months so that you can get past the COVID-19 issues, hopefully, and then go from there and figure things out. Because otherwise, if that tenant is paying, then you're just going to likely have a much harder time filling that vacancy, and then we'll have unpaid rent. And it's also just not as safe for you or the tenant to go about finding a new home right now.
Got it. Yeah, obviously that makes a lot of sense. What about for those who own their properties outright and they don't have a mortgage? So this question came through. They don't have mortgages on the property, so obviously seeking mortgage forbearance doesn't make a lot of sense because there is no mortgage forbearance. What options do those individuals have?
Sure. Well, obviously, we still have to pay real estate taxes and other expenses. When we calculate out how much it's going to cost to run a rental property, we normally assume that our operating expenses are 40% of the rent. So clearly, and that's outside of the mortgage. So clearly, there's a lot of other expenses there that they have to try and figure out what to do with. Hopefully they can, when we're talking with the tenant, at least negotiate. If the tenant can't pay the rent, hopefully they can pay 40% of the rent, and then that gives you some guidance there. Otherwise, I think they're in a pretty good situation to maybe do some financing or maybe go get a mortgage on that property that you can then use for some immediate capital, or take a small line of credit against the property. It doesn't have to be huge, just something small to get you past this tide. I think there's a lot of options that they can do there if they want to talk with a bank.
That makes sense. There's a lot of differences in between some of the mortgage forbearance programs that are being offered right now and for landlords who were around during the 2008 downturn. Can you share some of those differences? And specifically, this comes up because a question was asked of, how is interest being calculated if you go into mortgage forbearance right now?
Sure. Well, I'm not actually as familiar with the 2008 forbearance that was happening, but for now, forbearance is really on 3 different levels. here. So the first one is if your mortgage is Fannie Mae and Freddie Mac backed or federally backed, there's a different level of forbearance that you're getting on that. And that forbearance is if it's a single family home, you'll have 6 months of forbearance. And then if it's a multifamily property, you'll have 30 days with options to extend on both of those. And there, I think right now the forbearance is on principal and interest, I believe. The second type of forbearance is through the SBA. So if you have a loan that's serviced by the SBA, they're doing an immediate automatic 6-month deferment of principal, interest, fees, everything for 6 months. And then the third type of forbearance is, if it's not federally backed and it's not by the SBA, then you just have a regular mortgage with a bank. And there it's going to be on a customer by customer basis where you're going to have to just talk with your bank and potentially work out or negotiate something there. As far as credit scores, I know for the federally backed ones and the SBA ones, though asking for forbearance will not negatively impact credit scores. I believe that will also be true for non-federally backed mortgages because of the CARES Act, if they choose to do a forbearance. So don't have to worry about that. And then I believe interest is calculated the same way. It's just you aren't making principal payments, so the interest doesn't decline over that forbearance period. It just remains straight.
Yeah, thanks for sharing that. I just want to issue a reminder, obviously, for those who are watching can see the screen, avail.co/COVID-19. We have a lot of different links and resources on that page, including a few blog posts we've written. So some of these questions, if you check out the resources on that page, I think you'll find a lot of the answers there. So I want to make sure that you guys have that. I want to keep moving on here with a different question. So some people have just recently become a landlord like this year. So they have a very new loan on their property, or some people refinanced this year as they were sitting on a lot of equity and wanted to capitalize on that equity. Is there any risk in taking advantage of these programs, or are these only for seasoned landlords?
No, there's no risk. I think this is meant for everybody. Anybody who's having financial difficulty right now should be looking into all of these programs and talking with their banks, even if it's outside of the programs. And obviously, if you talk with your mortgage servicer, they're going to be very educated on these programs and can guide you in the right direction. So if you don't take away anything from this presentation other than just talk to your mortgage servicer, that's a really good takeaway.
Yeah. We are winding down here, but I want to get to a handful more questions. Thank you guys so much, by the way, for submitting all of your questions. Very helpful. Also, if you haven't yet, please go ahead and like and share this video. I really appreciate that. We want to make sure everyone gets a chance to see this information and work through this. One of the questions that's come through, and I saw a few different variations of this. One actually asked if the HOA can tell the landlord to disclose which tenants have COVID-19 or may have COVID-19. And then the other one is, about requiring tenants to tell you if they have COVID-19. I know we covered that a little bit, but Lawrence, can you go into a little bit of what are the boundaries about talking to your tenants about if they have COVID-19?
Yeah, well, I mean, so the law makes it pretty clear. For most states and cities, there are laws against asking health-related questions of your renters. There's a lot in there where you just can't be biased against your tenant's health situation so that they prevent those kinds of questions. Now, for an HOA to ask the renter directly or ask the renter through the landlord, those are two different things. If the HOA asks the renter directly, I think I'm not going to say that that's okay, but at least you are relinquishing yourself of that legal responsibility. But if the HOA asks you to ask, I would then just double check against your local and state ordinances and see what you're allowed to do. But most likely you are not allowed to ask that renter if anything about their health matters.
Yeah, thanks for pushing that. I mean, I know we covered that a little bit earlier in the webinar, but want to reiterate, it's very important that you also respect your tenant's privacy during this time. Obviously, you want to work with them and talk with them, but there are some things that should remain off limits. There's a lot of questions in here, Lawrence, about specifics to different states and cities. Obviously, can range. That's, as simple as calling your city hall to the planning committee and probably code enforcement. Is that correct?
Yeah, I mean, everything's going to be really specific to your city and state. I know for eviction stuff, we gave out a URL for the Evictions Lab by Princeton University. That's a really good resource to find out what's happening locally for evictions. As far as like mandated rent relief, there are some cities who are proposing giving some months or mandating some months of rent relief. And I think those cities are then also requiring mandated relief on real estate taxes and those other things. So can't go into every single city, obviously, in a webinar like this, but those are things to potentially be aware of that may be occurring in your city or state or upcoming.
Of course, yeah. One question that's popped up, and we actually got this submitted a few times prior to the webinar here, is does the tenant need to show proof that they've lost their job due to COVID-19 in order for me to provide any sort of rent relief?
I think, I don't know about that answer from a legal perspective, but a lot of tenants are going to be losing their jobs right now. So if your standard before COVID-19 was to require proof of employment to sign a lease with them or proof of employment to break a lease, then I would adhere to whatever your standard was before the pandemic.
Yeah, of course. Yeah. And obviously local laws are important to make sure that you're up to date on all those. Of course, any of these things you have questions, as we disclosed at the top of the show, if you find yourself in what feels like a legal matter, please contact and work with a professional legal representative so that you can get the best advice. We're in very unprecedented times and uncharted waters here. So some of the scenarios that many of you are facing are going to be unique in of themselves. I think we're hitting to the top of the show or the bottom of the show here, and we've gone over quite a few things. Lawrence, I wanted to pass it back over to you. If there's a few takeaways or wrap-up items that you could kind of tie up all together so that those who are watching have clear call to actions of where they can go from here. What are some of those things that you can give them?
Sure. Well, not to continue plugging it, but there's that URL on the screen that you've mentioned a couple times, which is avail.co/COVID-19. That has a lot of the information and resources that we use to compile the presentation on that website. So that's a really good place to go. But outside of that, I think the big takeaways here is to, one, be educated on what you have available to you and for your tenants. So know what's happening with the stimulus checks that are coming out, know what's happening with unemployment benefits, understand what's happening with relief options that are coming out of the CARES Act, specifically the PPP and EIDL, and some of the forbearance options that are happening, and take advantage of those things if you need them. And then I'd say the last kind of takeaway is to just have a plan. Most likely, we're all going to experience at least one renter who says they can't pay the rent. And so have a plan for how you want to address that. What options are going to make the most sense for you and that renter, and just be prepared to handle those situations. They will come up. And the best thing we can do is just be patient and try to collaborate with our renters on a solution that fits everyone's needs.
Yeah, absolutely. And before I give a few things here as well, for those who are still tuning in with us, thank you so much. In the comments below, if you want to leave a few suggestions on how we can improve further webinars like this, what you want to see more of, what you want to see less of, please go ahead and leave those comments directly below here right now. We'll also be sending out a follow-up email, so please look at your email in the next day or so. We're going to be sending out the recording, the deck, as well as additional resources and links. We want to make sure we're sending and providing you guys with as much as possible to help navigate through this. Of course, if you have questions directly related to your Avail account, don't hesitate to reach out. support@avail.co. That's support@avail.co. You can also reach us by phone, 312-292-9347. That's 312-292-9347. As we wrap up here, if you haven't yet, go ahead and share out this video. It'll be available to watch on Facebook as well as YouTube. So anytime, just go ahead and share the video. Get this in front of your other friends who are landlords and even renters. There's a lot of information here that's valuable to renters. Make sure they have this. We need to work together in this to figure out and navigate all that we have going on. So thank you all so much for tuning in. Again, visit avail.co/COVID-19 for our directory. And if you have any suggestions of things you'd like to pop on that page, of course, shoot us an email. And we really appreciate your time and attention. For Lawrence, I'm Nate Smoyer with Avail, and we thank you so much for tuning in. I hope you guys have a safe and healthy week. Thanks.
Thank you, everyone.